the point.
That's the point. Oh my gosh. I am so excited to speak to you, Yashnika. I'm always excited to talk to you because you're just a ball of wonderful, positive, amazing energy. So thank you for agreeing to do the Margins meet and greet.
Thank you for having me. I really appreciate it. I hope we have a really great, I know we'll have a really great, robust conversation. So bring it on.
Absolutely. Okay. So how about you walk us through your story? Like starting actually not from the beginning. Well, from the beginning, wherever you want to start, but certainly not today. Like
I
I
know.
would like people to know a little bit more about you.
Of course. No, I grad so a while ago now. I graduated from the University of Virginia and I majored in economics, thinking that I was going to go into the international economic development route. I'm Haitian of descent, I am West Indian. So I was always attracted to understanding international economies and particularly those that are in the developing areas. So I thought I was going to work for the World Bank or the IMF. But I also had a particular interest in criminal law. So those two particular interests was constantly competing all throughout high school and college. And then when I graduated from college, I moved to New York from Virginia and landed a role working for a coordinating discovery attorney in New York. So my
In the
primary role
criminal space or okay.
criminal law. So the primary role there was to help process large, voluminous amounts of discovery for CJ attorneys, criminal justice act attorneys for federal cases that are multi-defendant in nature. So these were mostly RICO cases. So there were a lot of heavy, I would say trafficking cases would be an example. We had a lot of those, a lot of gang
Drug
related.
trafficking or human trafficking? Because now,
Both,
yeah,
both
wow.
that would be include like basically there were a lot of gang related cases. So all the
Okay.
criminals that are related to gangs were those that we would have. And it was fun because there was a criminal psychology element to it, trying to understand the defendants, which were our clients from the psychological perspective, but also wanting to help the attorneys provide them with due process and be able
Yeah.
to have representation in trial. So
Were you defense side or
defense
prosecution
side.
side?
So
Okay.
I assisted. So actually, we were, to be fair, we were kind of the liaison between the two. So we would work with the prosecutors in order to retrieve the discovery that they would that they had
Ah,
collected and
got it, got it.
process it in a way that the discovering attorneys would be able to effectively and efficiently review for trial. So it was
Yeah.
like you'd be surprised of how much collaboration goes on behind the scenes between both sides, the prosecuting side and the defense attorney side. And we were
Yeah.
really little just to make sure that there was a more efficient, seamless process in reviewing. You know, we would have hundreds of terabytes of data for a lot of these cases, whether it was phone call, wiretap calls, it was, you know, videos, it was whatever. We were just a part of the process and trying to make sure that the system remained as efficient as possible, and you know, clients got their just due in the criminal act. So that was what I did for 2 years, and I did that while I studied for the LSAT, and then eventually went to Howard University School of Law and thought that I was going to be a criminal defense attorney. I thought that, you know, that was the side that won, and I was going to be able to fight for the cause in that way. And then I think within the first year, I was like, oh, you know what, on second thought. I
I
was like,
know,
on
you know why I'm
second
smiling. I'm just like, yeah,
thought.
I get that. I get that. Yeah.
Yeah, I think I unfortunately I didn't realize, you know, the life of an attorney is very different from what I had been exposed to because I was mostly all technology focused. I was the one behind the desk supporting attorneys from a technological perspective, that
Yes.
writing the memos and the you know, briefs and having to deal with the emotional tolls of being client facing, all defendant casing all the time, and being the
Yeah.
ones to communicate with their families and let them know what's going on, and not, you know, oftentimes be the barrier of very, very depressing bad news, was not
Yeah.
something that I thought I can do for the rest of my career. So once I really gave it some serious thought and was like, you know, I'm not really enjoying my classes. I'm in torts, I'm in contracts, and I'm like, I'm for the first time not really engaged with the material in school. And I've always loved
Mm,
school. So I thought
yeah.
that was a big red flag. And I took the plunge and just said, you know what, I think I need to recalibrate and reevaluate what is it that I really want to do. And so I left school and came back home with my, you know, tail between my legs and said, I don't know what to do now. Because I thought I was always going to be law bound one way or another, whether I worked with the World Bank or if I worked for a court or for a judge. Either way, I thought, you know, a law degree would be helpful, but it just didn't seem right. So when I came back
I
to
don't
New
I don't
York,
know if I told you this, but that is so brave. What you did
um,
is so brave.
you know, people say that, and now I think now that I have some years behind me, I can say the same. For a long time, it was really hard for me to take that L. Or at least at
Yeah.
the time, I thought it was an L
Yeah.
because I had invested so much time. And like I said, I'm Haitian, so you know, in our family, you only have three options, and then you hear a lot of people say this. A lot of immigrant families, particularly West Indians, say you can only be a doctor, a lawyer, engineer. You're not
Yeah.
one of the three that I don't know what you're doing with yourself because you're just a complete fail. And so for me, I had already ruled out the other two. And I was only left with law. So now that that wasn't working, it was like, oh boy, I was really lost for a long time. And I just so happened to, I was like, I'll just, you know, I paid a lot of money for school. You know, I'm kind of broke at the moment. Let me just get into something. Was sending my resume around and landed a job at a real estate private equity firm here in New York, which was really, really a journey because it was an eye opener. It was a totally different industry,
Yeah.
totally different get down. People walk differently, talk differently,
Yeah.
different language. And that was my introduction into the finance industry. It definitely was not expected. I was not planning on ever being in corporate America. I didn't have my eyesights on that, but that's where I landed. And from there, I've made my way to here. And it couldn't have been a better journey for me. I think it picked me as opposed to me picking it. So that was a couple few years ago. We're not gonna specify how many years,
You're all right. You are
but a
right.
few years ago.
You are right.
And
You still, but you still Gen Z, so it's good. Quick
yeah.
question. So how you said you sent your resume around, like how did you choose to send it to this one particular real estate private equity fund or firm, which is just light years away from what you've been doing to date or to
Yeah.
that date?
I think it helped that was in New York. You know, we are
Okay.
the financial capital of the world. So, in you know, just sending your resume around I majored in economics. So with an economics degree from UVA, I had a couple of my friends and a couple of friends who knew recruiters who just kind of had my resume, and I was getting calls. All of a sudden, not too long after I got back, and they were all financial related. They were all related to some type of private equity firm, venture capital firm, hedge fund. I didn't know what these things meant at the time. It was just a job. And if
Yeah.
I'm being completely candid, it was just a job. And so I chose one that seemed right in terms of the team and what they were doing. I was on the principal investments team. So I was on the team that was conducting all the due diligence for the real estate acquisitions that they were making. At that time, real estate was doing a lot better than it's been doing in the last couple of years. Rates were a
Yeah.
lot differently then. So it was just an interesting opportunity for me to learn something totally different
Yeah.
and just to be in a different environment. You know, talking to CIOs is very different in a way, and then not in a way, than talking to accused
Yeah.
criminals in custody. But it was a really good contrast, and I really enjoyed that process. But at first, I'm gonna be completely candid. I was in that role for about 2 years, and then realized that I wasn't sure if I was making the impact that I really wanted to make in finance. I was coming from an industry where I was making direct impact. I knew that the clients that we were serving really needed our help, and
Yeah.
they were in really dire straits, and their families
Yeah.
were really dire straits. But then you also had, of course, you have victims of crimes who wanted justice, and so I think the justice system it was more in the forefront
Yeah.
of
It was, super cute. Yep.
of community impact, which is something that I was always interested in. And I felt at the time a lot more removed from that in my
Yeah.
role. So I left that role and just traveled around the world for a few months and just kind of got my life together. And I was in Mexico, and I was in Paris, and I was in Italy, and I went to London. I was just kind of like on my own, just like, let me figure my life out. Came back, didn't want to come back, but had to come back due to family responsibilities, and got back into another role that really kind of pressed me forward in private equity and finance. And that's how I ended up kind of here. Um,
Before we talk about where you are now, I want to go back. Can you tell us, what does real estate private equity mean? Like, what is
So,
a firm that, yeah, what do they do?
so private, so it's two, so you could say it's two parts to that real estate private equity. You have the real
Right.
estate part, and you have the private equity part. The private equity part is just basically ownership in private markets, like in a
Yep.
private market asset. So it's not a publicly traded asset like you would get in like a public traded REIT, right? So
Yeah.
uh, basically these are deals done in private transactions,
Yeah.
not in the public um, market form.
Right.
And then you're dealing with the real estate as a particular asset class. There are several different asset classes that you can transact in the private markets. Real estate is one of them in the real
Yeah.
assets. Sorry if I'm getting a little bit of a glare of the sun. It's a great day today, but the
Ah, I love it. No, you look angelic, girl.
oh, thank you. I try. No. And so real estate private equity is that, is the transaction of real estate assets in a
Yeah.
private, basically.
So
Um,
wait, did they do them, did that firm focus on those two individual assets separately, or did every deal have a component of private equity and real estate as a part of the deal?
so it was private. So real estate was the asset that was being transaction in private market. So it was like the one asset class was real estate. Now, real estate can be different kinds of, like you can have
Right.
retail, you can have hotels, you
Exactly.
can have like that.
Commercial component, and there would be, some type of, not corporate, but like a business component that's operating, like, for instance, margins invested in a vineyard. And so there's a
Mm,
real estate component where we own, we're part owners of the actual land with the grapes, or the farm with the grapes, but
yeah.
on that property is also a event space and a luxury inn. And so that to me is, I get that's real estate private equity, but
Mhm.
I just want to make sure that I understand, and for the people who are watching, they understand. So I guess my question is, like, was it both similar to that vineyard deal, or not necessarily?
Yeah, it was similar. They focused on office, multifamily, and
Got it.
and hospitality. So that was their main
Yeah,
focus. And
got it.
there was another firm that we worked along with often that focused on uh um like a state, like kind of community planning. So they would
Okay.
basically build from ground up. They were considered to be opportunistic investors. So they would build from the ground up, like single family homes
Oh,
in
wow.
these large lots.
Yeah,
And then they would either rent them or sell them, whatever they found would be the most optimal for their business plan,
got
for their
it.
model. And then obviously you had the investors, third party investors who would come in to take stakes in those investments. So that's pretty much how they operated. They did have a secondary business with special servicing, which is like has to do with the mortgaging and the debt
Yep,
servicing, those
yep,
who
yep,
went
yep.
liquid and having first look in terms of what assets they can get at what price. It was like this whole complicated modeling. That was my first time being introduced to financial modeling, and I would see the investment memos come through my desk all the time for these different asset classes, whether it was a
Right.
skyscraper in Philadelphia or it was a hotel in Las Vegas or whatever it was. The team that I was on would do all of the due diligence. They would spend ample time, so much time and energy and effort collaborating and discussing and talking to brokers and talking to professionals out in the field and to create a model that kind of gave them a better understanding in terms of what the return streams would be on that
Right,
asset.
right.
And then they would put it in a coherent form for the entire investment committee to review
Review.
and to
Yep.
deliberate on. And so I would see all of these memos and I would read them as if I knew what I was reading, when really I was just using it as a primer for me to start to understand. And I would
Yeah.
Google everything and Investopedia everything, and just
Yep.
that was my introduction to finance. I really did not have any understanding of what the financial world or what capital markets or how, I understood economics, but I didn't
Yeah.
never married the two together. I
Mhm.
understood interest rates. I understood, supply and demand curves. But as you know, for those who have taken an economics class, it's very theoretical.
Yes,
Being
yes.
able to apply it was new to me. And
Yeah.
that was my first time being able to do so.
So what exactly did you do on the due diligence team?
I supported the team. I just supported the team. I was a junior person. I did whatever they needed me to
Whatever
do.
they ask you. Okay. Okay. Yeah. You were another brain that they just used to fill
Yeah,
in wherever.
it was good because I needed that high level bird's eye view at the time.
Yeah. Yeah. Yeah.
Um, but it wasn't once I started to feel it out, I was like, I don't know if this is something that I want to do forever, you know. And I
Yeah.
think it was just trying to figure me out. I think sometimes we think that we know exactly what we want until you get there, and then you're like, actually, second thought, you know what I mean?
Yep. Yep.
Um, so yeah, I think that was just it was necessary for me to be in that seat at that time because I needed that high level bird's eye view of not just what finance was looking like and what numerical analysis looks like and all of the work that goes into making an investment decision, but also understanding
Yeah.
what the industry was like, how it moves, how it flows, and the
Yeah.
characters that exist in it. So it was a
Yeah.
really good high level primer for me, and I'm really thankful now that I'm in a more elevated and a more complex seat that I was able to get
Yeah.
that experience.
So still so many. I'm not gonna spend too much time on this small
Anything
part
for
of your
you.
career, but you did say something like you learned how you learned the different characters and how they operate. And obviously I'm not, you know, I don't want to put you on the spot too much, but can you speak very generically about like what you learned in terms of some of the players and how people moved in the financial space in the I guess this was was it post 2008.
This was yes. Yeah, oh
Okay.
yeah. I was still
Oh,
in yeah.
I'm sorry. I
I
forget.
was in grade school during those times.
Don't come for me. Yeah, yeah.
I'm not, I
There you
promise
go.
I'm not. It's all love.
Okay, but yes, all right. So can you talk a little bit about how that was different?
I think what I've learned now in retrospect is like everything is a people's business.
Yeah,
And and I didn't fully appreciate that at the time. So
yeah,
I was looking at how different a lot of the players that were really making the moves were from me. You know, I lived in
yes,
Brooklyn at the time and I worked in Midtown Manhattan. And so coming from Brooklyn, Crown Heights, which was traditionally, as long as I've known it to be, I grew up in Philly, but my family has been in Crown Heights since the 80s.
yeah,
And back then it was like Caribbean. It's now considered Little Caribbean, but that's all that I've ever known to be there. So
yeah,
coming from Little Caribbean, Flatbush, Brooklyn
yeah,
to Midtown Manhattan every day and recognizing like, hey, you know, I don't see a lot of representation of like me. I don't see anybody like me who are in the decision-making seats. I don't see anybody. No one looked like me in the IC meetings. No one looked like me in the manager roles. No one looked like me in the managing director roles, or no one were on the brochures or on the organizational, you know, the company organization chart that looked like
yeah,
me. No
yeah,
one.
yeah.
And so understanding it, that was a little different from law. Coming from a criminal, you know,
Right.
again,
I mean, there's so
criminal law,
many. Yeah,
you
for
know,
sure.
where you have a lot, you have a little bit more, not, I shouldn't say a lot more because there's disparities all over the place, but a little bit more representation in the
Yeah,
legal front than there were in finance. And so that was
yeah.
the first time that I ever even thought about it. I ever saw it. And it's because I was confronted with it every day. You know what I mean? And so when we're talking about these big numbers and you're talking about investing 8 figures and more, and you're looking at the investor base and you're looking at where they're looking, you know, for the investor base, and you're looking at who they're transacting with, who they're making deals with, it's just like, no one looks like me, you know,
That's
no
a
one looks like
lot of
my dad.
money.
You
Yeah,
know what I mean? And we're not investing $50, $60 here. This is wealth generation. This is wealth
yeah.
growth. Really how,
Creation. Yeah.
yeah, it's wealth creation and growth, compounded returns over a long period of time. That's really creating what we would call the power players in finance.
Mhm.
And that was the first time I've ever been in a room with them. You know what I mean? And I wasn't
Wow.
I wasn't in the seat where I could speak, to be quite candid. I wasn't in a
Mhm.
decision-making seat, but it was the first time ever being in the room. And it just was it was a aha moment that like, okay, this is where you know, some improvements need to be made in terms of having
Mhm.
better representation in the rooms, in finance, in investment capacities. You know, so when we met, actually, if you don't mind me mentioning that, when we met
Please.
at the
Yes.
Black Women in Asset Management Conference, I thought that was absolutely a splendid event because it's very rare that you're going to
Yep.
see to this day in 2024 so many African American women in one place. And the fact that we can all fit into one place is a conversation for a different day. But the
Yeah.
fact that we are able to connect, the fact that we were able to connect and
Yeah.
socialize and network and explain, our identities to one another, our experiences to one another, and kind of lead, guide each other into ways that we feel like could be beneficial to the community, I thought was absolutely exquisite. And
Yeah.
that is very much needed because I would say that we have one of the lowest representations across industries. I have a girlfriend, one of my best friends is a physician.
Okay.
Shout out to her if she ever watches this video, but she's a physician and she's always complaining about the lack of
Mhm.
representation in medicine, which is absolutely correct, right? We
Yeah.
talk about actual doctors, white coats walking in as an African American and then African American woman.
Yeah.
There's definitely a disparity there. But when you talk about finance, I'm like, girlfriend, I think we got you. I think we got you.
I
There's
think you might be right. There's no, it might be too few to count.
mm-hmm.
You know what I
I
mean?
know.
Like, yeah.
I went to a conference last year and it was a conference for financial advisors. So it's a little bit different of a business,
Yeah.
for those who are in financial advisory. And they said something like that. There are less than 3% of financial advisor community is African American. Now, last
Yeah.
I checked, we were at least 13% of the population. I think somewhere
Right.
between 50% or something like that.
Right.
So that was a jaw-dropping statistic, and I think that more attention
Oh, yeah.
needs to be put on that. The
Oh,
disparity of
the numbers
representation is important.
are crazy. If you start talking about the venture capital numbers, the
Yeah,
people of, I think,
yeah,
okay, they're 0.03% of Black women fund managers.
yes. And those
Yeah.
are the people making the decision in terms of where money is being allocated to. What businesses are going to be funded? Who's going to get the loan? Who's going to get the equity shareholder? So you think
Yeah.
about, so not
Yeah.
as it's just it's on both sides. When we're talking about the investment side, right? The investors who are able to allocate to these funds and be able to benefit from the return stream of these funds, particularly in alternative assets, as we know.
Yeah.
For those who don't know, alternative assets are, well, the way we define it, or the way I define it, are uh, based investment transactions outside of the public markets or traditional publicly traded stocks and bonds
Yep.
that typically tend to yield, historically, they tend to yield at least 200 to 300 basis points of spread above public markets in exchange for a little bit of liquidity, right?
Yep.
Alternative investments.
Yep.
So these are a lot of real assets. These are a lot of, private market transactions that we talked about, private equity, private yield, hybrid assets. It could even be paintings. There's
Yeah.
commodity trading. There's a whole world of alternatives out there. But we know that there's a disparity of investors who go into alternative investing, and then we know that there's a disparity of entities and companies that are being funded by alternative investing. So double-edged sword here. And I think I don't think people want to talk about it because that opens
Yeah.
up a large can of worms about a lot of things, history and
Yes.
practices and you
Yes.
know that it can get spicy. It can get spicy, but it's a
Get
necessary
spicy.
conversation
It
to
can get
have.
spicy. It can. Oh my God. Okay. And see, this is what happens when you and I talk because it's just so much. It's so good. It's all so good. Oh, I do want to talk to you about. All right. So going back, you said, all right, it's been 2 years. It's so uncomfortable. Your first job, I feel like after undergrad or whatever, it's really uncomfortable being in that space and learning how to navigate the corporate space
Yeah.
as as a Black woman. I'm gonna just say it.
Yeah.
But you, after you traveled around the world, which again, very brave young woman traveling around the world, and you speaking to my own heart there. But you decided to come back and rejoin another firm in the alternative space.
Mhm.
Can you talk a little bit about what you were thinking? I know you said you had some family commitments, but yeah, maybe you had an epiphany. I don't know. Can you tell us what was going on there?
I really I can't say that it was me. I think it just, I'm, call me crazy, but I think I just was supposed to land exactly in the seat talking to you right now. Because it wasn't like, oh, I changed my mind. I need to be in corporate America. It was just like, I'm in New York. I came back to New York to be with my family. And, I started just looking for opportunities again,
Yeah.
and was looking for something that just spoke to me. And I was like, I saw a lot more of a diversity than before within finance. Like, finance is so
Oh, okay.
ubiquitous that you can do so much with it if you
Yeah.
understand it, right? Like,
Yes.
nonprofits have financial
Right.
departments, or, just understand endowments or whatever, just
Yeah.
understanding what money does, and how money operates on an international scale, and how it flows through time is a very useful skill. And I
Yes.
was able to get that primer, so I felt a lot more comfortable with it the second time around than the first
Yeah.
time.
You need
So,
some space. Yeah.
yeah, I just needed some space, and then once I got back in, I felt a lot more comfortable, and it was like, okay, I feel like I can actually find my way this time around than before.
Yes.
So that's how that ended.
So
And
you
mhm.
currently, so is that when you join your current role?
That, yeah, even now,
Okay.
it's like, when I joined Apollo, I can honestly say that it just felt right. I know I was able to meet with my senior partners, and they were right on the money. They were um creating a business, the global wealth business, at a time
Okay.
that at the same time that I was meeting with them. So it was perfect opportunity. I thought the team was wonderful. I thought they were supportive, they were excited, they were energized. I thought the initiative and the objectives of providing solutions to retail investors, which was something that I was
Yes.
into, was really, really important, and really um necessary for the time. And so
Yeah.
it just all like stars just aligned, and I
Yeah.
couldn't have made a better decision. I'm really excited for all that has been had in terms of success thus far, and I'm really
Yeah.
excited for where we're going in the future.
Can you tell us a little bit about what you're doing there?
Yeah, so
Is it
I'm
still in the due diligence space or is it a little different?
No, so I'm client facing at the time now. So last year I was able to get my licenses. I got my Series 7, I got my Series 63. I now support my senior partners who cover the large RIAs, or registered investment advisors,
Yep.
as IBDs, or independent broker dealers. Just for those who may
Well,
not.
thank you for
Yeah.
like translating because
Yeah, it's
yes.
necessary. Acronyms. Sometimes we think acronyms is like universals. It's like, no, girl, just
Right.
like just for you. So we cover the middle of the country, and so I
Okay.
support them. They're client facing. They're constantly meeting with LPs, the limited partners,
Yep.
investors who are now stakeholders in the solution portfolio solutions that we offer, as
Yep.
well as prospects, those who are looking to be LPs in the future, now or in the future. And we are, our primary goal is to educate those on alternatives, those who are not familiar with alternatives or are new to alternatives, educate them on our platform and how we can partner for the best of both worlds. And that's pretty much our mission every day.
I am so excited to. So now we're gonna segue. I was about to say I'm gonna let you go, girl, but I'm really not. A few more minutes, but um, let's talk about education. It's amazing that because I spoke with the head, one of the co-presidents for the Blackstone private equity um retail fund BXP that they started, and he talked a lot about education, and you and him talked about educating the RIAs, the advisors, and I at Margins, we are focusing on educating individuals. And so it's just really interesting how much education needs to happen, even for these financial professionals.
Absolutely. Yeah. So the interesting thing about alternative investments, as as simplified as we've made it this nowadays, for a long time it was considered to be extremely complicated. Like, I think it proliferated in the 1990s. And so alternatives was seen as like this scary monster that only was accessible to institutions, because they had the large amount of assets that they can allocate to. They had They had different tax implications. They had different access points.
Yep.
So for the retail investors, when we talk about financial advisors, or we're talking about CIOs or family offices or investment analysts at RIAs, it was just not something that most people actually participated in. It was something that was considered, was complicated when it comes to sub-document process. We talk about semi-liquid perpetual products, which are just now,
Yep.
becoming a hot topic, if you will, for a long time. A
Yep.
lot of alternative assets, a lot alternative funds had like, they were drawdown funds. So you had like these long lockup
Yeah.
periods that
Yep.
you had to lock up your capital for a certain amount of time. You can't get it out. You can't touch it. They were expensive. He had a J curve, so you really didn't see any returns, or you saw a negative return on your money for a certain amount of time before you could see any positive. It was like all these type of not very attractive attributes of alternatives. And so a lot of people stayed away from it, whether you were in
Yeah.
finance or not. A lot of people just stayed away from it. I think now is the time where it's like, no, we recognize that most people don't require daily liquidity. Most people have their money in checking accounts and saving accounts and money markets, and they don't touch it for months, if not years.
Or
And then when you,
401ks.
yeah, exactly. You're
Right.
storing money up for 20, 30 years, and you're not generating your highest returns that you should be. Why? You know what
Yeah.
I mean? Because of fear or lack of understanding. So I think
Yeah.
now is the time when we think about like inflation and getting a real return. We're like, I remember my mom was like, I used to fear for you when I thought that cereal was going to be $5 by the time you had children. Well, I don't have children, and I just bought a box of Cheerios for $9 the other day. Okay, what I mean, you see what I'm saying? So we're talking about the wealth that we need when I get old. I want to be able to live decently when I get old.
Can I
When
have Cheerios? I just want to
I,
have some Cheerios.
I and with some strawberries every now and then, that literally strawberries will probably be like $72 for a pint by the time I get, you know what I mean? By the time I hit retirement. So when we talk about capital needs in the future, retirement services, like the conversation of alternatives needs to be had, because that's really where risk adjusted returns are really showing up. We've seen in the last couple of years the destruction of the 60/40 portfolio that was
Yep.
primarily in public markets. You know what I mean? A lot of people had no allocations, if not very little allocations to alternatives. And portfolios have been completely left in shambles. We got 70-year-olds working at the
Walmart.
retail market. Yeah, because it's like they need capital, they need money. You know what I mean? And so it's like, girl, we need to do something about this. And the education is the key. We say, I believe the children are the future. Well, let's start. You know what I mean? Let's start with the re-education of money. And that's, I
Yeah.
think, another issue that we don't talk about is a lack of education of money from a young age. Like
Yeah.
I was telling my friend, my best friend, I was like, I've learned to have a doctor since I was young. Most people learn to
Right.
have a primary care doctor when they're young. No
Yeah.
one ever told me to get a financial advisor when I was young.
Yeah.
You know, I mean, to have the conversations about financial language, to
Yeah.
understand it, to feel comfortable around it, to have quarterly check-ins or semi-annual check-ins with a financial advisor is the same as you do as a yearly regular with a doctor. That should be had
It
in
should.
our community across the board, not just in our community, but in everybody's community,
Yeah.
because financial wellness is a very necessary it's another necessary part of adulthood, even
Yeah.
going into adulthood. When we talk about 529 plans and how to save up for college, trust, and yada yada yada, there's a large segment of information that I think a lot of people don't get to at all. If they do get to it, they get to
Yeah.
it late. And we know that the most valuable, the most important variable in any investment formula is time. Like
Yes.
returns is the most important form. It doesn't matter if you're generating 20%. If you only generated 20% for 1 year, great. You know what I mean? But you want to
Right.
have that year after year after year. Uh,
Yes.
so I think alternative education is really paramount to anything that we do in the now and in the future, and it's critical that we do it on a big scale. You know what I
Yeah.
mean? That's why I'm so grateful to be a part of the institution that I'm in now, because we really operate like a think tank. And so I came in
Mhm.
with a very limited understanding of capital markets, a very limited understanding of alternatives. I came in, I'm essentially, I would like to say that the way I see it is that I'm someone that would benefit a lot from what you're trying to do. Like I'm the benefactor of your mission statement and your objectives. Like I don't, I have a coin or two, but I don't know anything. I don't know how to do it. Yeah, I don't know what I'm
Right.
doing. I didn't know how to do it. And so I come to Apollo and now I'm like, okay, I'm understanding of it. I'm feeling more comfortable with it. Now, how do I utilize everything that I'm learning and
Yeah.
benefit the community, and share what I'm learning with the community? So I think that that's where I am now. And I'm hoping that, we're able to do some good with what we have,
Yeah.
in the positions that we're in.
Yeah. Yes. I mean, because even I would imagine being at Apollo and seeing because Apollo is very successful and seeing the amount of capital that's moving, um, are you as a retail investor available to participate in an Apollo type fund? Like, do you meet their standard of net worth
Well,
um, to be able to participate individually?
so I think for me, understand. So outside of being anything specific to Apollo product
Right.
and specifically, I
Yeah.
think under for me, I've learned like the import of understanding suitability for any type of investment, particularly with
Ah,
alternatives. So when we talk about and I view it in multiple ways, right? So
okay.
most people in the financial industry will view suitability as like a numerical value, like whether
Yeah.
you're accredited, QP or subaccredited, or I should say subaccredited, accredited, or QP. And that just essentially is a numerical.
Sub-accredited? Oh, that's not accredited? Is that what
Yes,
sub-accredited
yes.
means? Okay. All right.
So if you have $1 million or more in net asset value minus your, as you know, and minus your primary residence,
Yep.
you're
Yep.
accredited. If you fall below that, you're subaccredited. If you have
Yep.
$5 million or more minus your primary residence, there's some other qualifications. It's all in. You can look it up. It's public information, and you will
Yes.
qualify for it. But I think there's more to that, right? When we talk about suitability, when I think about myself and my investment path and career and how I want it to look. And I think there's a component of, like, as we said before, as we talked about between you and I, there's a psychological and emotional component to money that also plays a part in suitability,
Yeah.
right? We talk about
Yeah.
risk aversity versus risk
Yeah.
taking. And we know that some of us have had severe traumas related to money in the past. So you could be sitting on $20 million, but if you're afraid that someone's going to take it, right?
Girl.
Going to somebody and saying,
My
here's
God.
$20 million, please
Yes.
invest for me, knowing that they cannot guarantee you returns, that's a lot. That's a lot to
That's a
do.
lot. It's
That's
a
a lot.
lot.
And a
Yes.
lot of us has had severe traumas, or we've had to take care of family members. You know what I mean? We've been the only person with a checking account before.
Yeah.
We made some of us are immigrants and came from countries where all of our assets were seized before we got here. We worked really hard for 20 years and then we didn't have nothing. We've been
Yeah.
here. All of our
Yeah.
assets been seized for nothing. So
Mm.
there's a story behind everybody's relationship with money that I think plays a part in suitability outside of just how much you have.
Yeah.
When it comes to me, I'm still trying to understand my suitability because I'm fairly risk averse. I will say that, but that's because of my upbringing,
Right.
right? I have family members I had a grandma who always went like online baking, not gonna happen. You know what I mean? She wants to go to the check cashing place and get her money in cash so she can
Right now, so she
count
can.
it.
Yep.
Okay. So she can count it on the spot. She gonna keep it with her every time she has it with her. Okay.
Yep.
She's not letting it go. I know people who are afraid to transfer money on an app because they're like, I don't know who's gonna steal my identity. I don't know who's gonna. So there's
Mm.
this suspicion around the
Yeah.
financial markets, particularly now since so much of it has been digitized,
Yeah.
that we don't talk about. We don't talk about people's personal relationships with money. So I think it goes outside of just a numerical value. And for me
Yeah.
to say, like, oh, I fit this criteria and I can invest
Right.
there and I can invest there. It's like, am I comfortable? Do I understand the risks involved as well?
Yeah.
Right? Because investing means that there's no guarantee. You know
Yeah.
what I mean? There's no guarantee. I think there's a comfort in knowing that, at least certain your accounts are insured, FDIC
Yeah.
did a job. There was one positive that came out of the Great Recession or the
Yeah.
Great Depression. But there's no guarantee in investing. And then you have to talk about finding a financial advisor that you trust and you can have a relationship with. Well, as we
Right.
talked about earlier, there's not a lot of us in the community who are financial advisors. So you
No.
have to go outside the community to find a financial advisor that you trust. So there's a
Which is
lot
another thing to overcome. Yeah,
Yeah, in
yeah,
terms of
yeah,
determining, in my view, suitability, you know what I mean, a
yeah,
particular solution, understanding downside protection, understanding volatility. That's where I am now. I'm really asking myself the hard questions as terms of how do I want my portfolio to look like? I'm young, and so if most people who invest in a 401k, the 401k probably has a model allocation based off of your age
engagement, yep.
that kind of allocates for you. Well, that's a good place to start, right? Just try to just understand that. Why do you have more stocks than bonds, or more bonds
Mhm.
than stocks, or whatever, whatever? That's a good place to start, I think, just to understand that. Because a lot of people,
Yes.
you'd be surprised, don't even understand it. They just let their money go into the fund and call it a day.
Yeah.
But I think that there's a lot of value in being able to be comfortable around money, be comfortable in understanding money, not just as a piece of paper that isn't backed by gold, you know what I
Right, because
mean?
it's
Yeah,
not.
yeah.
It's back to buy
Um,
our promise.
you know what I mean? Yeah, to understand really how wealth generation happens, and wealth creation happens, and how our companies finance. If you wanted to be an entrepreneur, how you going to finance how you going to finance it? You know, how equity versus debt, and understanding, you know, hybrid models, and even options and futures and derivatives, and you know, if you want to go into hedge funds and the high, you know, what the risks are there versus venture capital and angel investing, you know, it's a whole ecosystem to learn, but you just got to find where you're comfortable, you know, where are you comfortable? I think that's the question.
You just dropped all the bars. Like it's like there's this song. You're from Philly, you know that song when the guy just keeps rapping and rapping that old school song. He just keeps. You probably don't know it anyway,
Oh
but
no,
that's
no,
it.
I
That,
probably do. I probably do. We're not talking about a Sugar Hill Gang or
no,
Grandmaster
we're not talking about Sugar.
Did I
He
go too
is
far back?
Master somebody. I don't know. My husband knows about it, but he's a little older, so I'm not
Oh,
gonna
okay,
put that on him.
okay,
But
all right,
anyway, you just
okay.
dropped so many bars, and I know you have a hard stop. So oh my God, Yashnika.
Anytime. I think these are important. And anytime you need my help with anything, anytime you want to ask me a question, I'm always available. I really appreciate what you're trying to do. I appreciate meeting you at the Black Women's Asset Management Conference. I'm hoping that we get to meet again in a lot of those
Done.
events. And you know, I wish you all the success and best of luck in everything you're trying to do. Thank you so
Thank
much for
you
having
so much. Absolutely.
me.
We'll talk soon, okay?
Absolutely. Have a great
Okay.
one.
You
Bye,
too.
everyone.
Bye.
Bye.